So the newest, hottest, maybe not newest, oldest topic is really the condo market in the Toronto real estate world. I have been actively looking for someone to bring their knowledge about the market to leverage. And today I am thrilled to be able to have Dominic Tompa, who is the president of Daniels Realty. And so welcome to Leverage, Dominic.
Thank you. It's great to be here.
Yeah. And as I was saying to you, it's just such a small world that I was actually sitting at a real estate event last night and I heard Mitch speak, the CEO, and listening to his story and how he got into the world of development. And who would ever know that a hippie who went to the London School of Economics, who was all about building co-op and affordable housing, who still is. I really took away from him and his son who spoke how important it is and how much it is at the roots of who he is to make sure that they're always thinking about the community that surrounds the build, how to make it accessible. And I learned so much last night. It was a thrill. But we're here to talk to you, not to Mitch. So welcome.
But thank you very much, but much of what we do has been driven by Mitchell's passion for, as you mentioned, starting basically in social housing and trying to find ways to make market housing affordable and accessible to people. So the Daniels Corporation, over our lifetime, have done so many different programs that have been designed to make the entry level into housing available to everybody. And we've done it with the first ever rent-to-own building in the city of Toronto was the Chelsea up at Bayview and Shepherd back in 2003. And we did an entire building as a rent-to-own project where you created homeowners out of people that may have been renting for another 5 to 10 years before they were able to buy. We've had down payment assistance programs in important communities like Regent Park, where we were part of that very significant revitalization over the last 15 years. So this has kind of been, it's been a passion of Mitchell's and it's a passion of mine too. I mean, the greatest joy I get in what we do is when we can help that first time buyer, people who aren't sure if they'll ever be able to afford to buy a home, and trying to find a way to create programs to get them into home ownership.
So thank you so much, because I think that it's a very important nuance in the misconception about builders and where we've come from. And again, you were licensed in 1984. You specialize in condominium sales. Like, you've seen it all. Listen, I'm a newbie compared to you of my 15 years in the business, but we're in a really interesting time. Like Mitch was laughing with his son, like he was ready to turn the reins over to him, and he's like, "Yeah, thanks a lot." Like, now,
it was a little cruel, yeah.
Market, thanks, Dad. Kind of thing, but.
And the good thing is Jake has done a fabulous job in very, challenging times for all of us. And in ways he's continued along the path, but also created some new ones as well.
So yes, and it was very interesting to hear about kind of the direction that they were taking. But I also would say that, the idea or not the idea, this kind of manifestation of the condo crisis, for lack of a better term, is really this kind of like pointing of fingers that it's like all the builders' faults, that they were just kind of greedy, and they were building these shoe boxes and like all this stuff, and it was so amazing. First of all, I do this every single day, so I know that that's not the case at all. But, I wish that everyone could hear, the Daniels Corp talk about what they do and why that is actually not true at all. And that you do everything you possibly can actually to connect the community and the first time buyer and make it accessible to everybody, possibly. But you came from an interesting time also. So 1984 to now, condominium sales, what would you say is the biggest change? Like, I would love to just hear your kind of like overall arching perspective.
Well, first of all, when we talk about a condominium crisis, I think that is overblown. So the reality is, having been in the industry for 42 years, I think it works out to, is we've seen these ups and downs, and there's a certain natural progress that the marketplace takes. And that's the reality of an open market is, and when you're dealing with something that, yes, it's a home, but many people also see it as an investment. And so investments, whether you're talking about real estate or the stock market, will kind of go through these periods, right? So I think you can get too caught up in when we're going through this phase of a marketplace that, oh my gosh, the world is ending. And the answer is, of course, the world isn't ending. There's changes that we're going through, and as we go through them, what the landscape looks like in the future for the type of buildings that go up, the number of suites are in a high-rise condominium, the type of suite layout, that will change, right? And that has always evolved. If you take a look at from 1984 to now, it's evolved a lot. When I first started in the business, any level of condominium was at least 750 square feet, and you had
minimum
3-bedroom condos that were 1,500 square feet. They weren't exceptional; they were just the norm, right? So this is something we're going through, and I don't see this as this kind of dire situation. I think this is a correction that was needed. We had a very long run up, and when I think of I started just kind of at the end of one of these downturns in the early 80s. I remember I bought my first home, and my mortgage was at 18.75%. So let's
stop for a second, back that up, literally when people are upset. Now listen, you could also buy a condo for much less, but still people think that 4.5% is high.
In relation to affordability, yes, you could buy a condo for less, but I was also making about $350 a week. So there's the relativity is that the affordability, we were coming out of a time of challenging affordability, and we've had this, every 10 to 20 years you kind of go through this, and there's a correction. Sometimes it involves interest rates, sometimes it involves some depreciation in the value of the real estate in the short term, and then starts going back up. And so we're seeing kind of something that we've seen before in the early 90s, which was maybe more akin to what we're seeing. Even then, interest rates, 5-year money was at 13%. And we went through the same type of correction where condo prices dropped about 25% in a period of about 2 years, and then slowly went up. And for people who held on to their real estate, by the year 2000, they had made a lot of money. And even today, anyone who purchased at the very peak in 2021 will still do very well as long as they hang on to it.
And so I think there's a lot to unpack there for sure. I agree with you when you hear about this kind of condo crisis. And I actually had a client who moved to Vancouver temporarily for work. And she called me and she said, listen, we're thinking about coming back. But you know what? Listen, we hear the condo market is crashing. If there's something we should come back for. And I said, oh, no. I said, listen, I understand that that's what the headlines are giving everybody. I said, but it's a tale of two cities, because yes, you have this kind of clogged system of, 500 and under even 400 square feet of these bachelor type of units downtown and very big high rises that are clogging the numbers on paper. I said, and then you have people who are looking for good units. And again, good unit, over 800 square feet, 2-bedroom, in a good building, good maintenance fees. It's next to impossible. And the reality is that, I just went, I bought a condo for a client downtown, similar dynamic, got into a multiple situation buying it for her, and then showed another unit, very much so, if you know the build, 500 Avenue Road, a great building, destination. They don't build them like that anymore. 1,500 square feet. There were 3 offers on it within 6 hours. So, and it was $1 million, and you probably had to put $500,000 into it. But how do we? So, taking all of that and knowing that there is this correction, I actually think the correction is how they're being built, and it's not the builder's fault. It's that the math isn't mathing because of all the levels of government. So do you think, as an expert in this like business, that anything can change in the way of redesigning these future, because no one's building anything right now, let's be honest, but what until we get through this inventory, but when they do, we can't go back to building those units or those types of buildings, or do you disagree?
I somewhat disagree, and here's why. Much of the narrative is now kind of a hindsight narrative. We're looking back and saying, okay, today there isn't much demand for a 400 square foot studio apartment, and so you're saying, oh, you built what people didn't want. I'd say that's a false narrative. So when builders will build whatever the market is going to absorb. So, we're not getting together and having a meeting and saying, hey, let's build this because we like this. We're reacting to the marketplace. So let's talk about where the marketplace was and why those suites were being built for 400 square feet. We were going through a time of high immigration. We had foreign students were about almost 50% higher in numbers than they are today. So when you looked at, like, I'll give you a Regent Park where we talked about that revitalization we did, but our studio apartments there were very popular. Why? Because foreign students needed a place to stay. It had to be affordable. They couldn't rent a 2-bedroom downtown, but a studio fit into what they were. And from an investor standpoint buying that, the truth was the investor had the best return on the studio than they did on any other suite type. So did we build something that the market didn't want? Of course not. We built exactly what the market was asking for at that time. Now, because interest rates are almost at zero, right? So low interest rates caused a lot of people to want to invest in real estate because they weren't getting any money in the bank. They were also looking, what's the lowest price point? Well, the lowest price point will be on the smallest suite available.
Right? The money made sense because it
was a lot of the market. The market was driving what we were building. And even today, as we talk and you keep reading article after article, builders the reason why they aren't selling is because they're not building big suites. Yes, there's a segment of the market that can afford to go out and buy a 1,500 square foot suite for $1 million, but most of the market is somewhere in that 500 to 700,000 range today in condominiums, and that won't buy you a 1,200 or 1,500 square foot condominium.
No.
So it's one of these things that, sure, people, if you were to ask someone, and this is the disconnect, right? You go out and you ask people, well, what type of size condo would you like to live in? They'll tell you, oh, I want to be in 1,200 square feet. If they start looking around, start wanting to buy, and they realize, well, that 1,200 square foot condo in terms of cost is going to be about 30% out of their price range, then they're going to start looking at what you can actually afford, right? So there's still an affordability factor that plays into it. Sure. Now, the reason why I think the condos will get larger in the next little while, and it's just a reaction to the market, is because the prices have corrected to some extent, interest rates have started coming down, the affordability will become greater, so people will get closer to matching what they ideally prefer to live in and what they actually buy.
So if I'm understanding what you're saying, you feel like builders were not building large units because people couldn't afford them, and you were building smaller units because that's what people could afford?
We were building what
really a math issue. I mean, like, are builders making money on large units?
It is a math issue because the reality is where the majority of the demographic who is going to buy, and when you're building a building with 400 suites, you're not building it for that very small sliver of high-end buyers. I mean, there is a market there, but it's a niche market. But for a builder who's building multiple high-rises, you're not going to find 500 people who can afford to buy a 1,500 square foot home. So you're building for where the greatest numbers of the market is. That greatest numbers was on the entry level. It wasn't on the higher end of the marketplace. So that's why that was being built, right? So today, looking at it, no one's buying a studio because they can afford to buy a 1-bedroom. They can afford to buy a 1+10. That's why they're not buying the studio. If prices start to go up again, you'll see studio apartments in the market again.
Yeah, and I totally appreciate that, and I've always had this perspective, like when people kind of, again, like I said, come after the builders. I mean, the reality is that you are not a non-for-profit company. You're going to build what the market demands and which you are going to make a profit on it. That, like, no one faults you for that. I mean, at least not in our business. Do you know what I mean? And I think that just stems from affordability and frustration in the market for sure. I think that a lot of what I've heard, spoken to, there's also issues with like the development costs. I know in being at a number of events, listening to a Benjamin Tal who was called in to be, to the Canadian government to be part of the housing policy, is saying, listen, there has to be changes at every level of development costs. Otherwise, builders are not going to be able to build these larger units and build homes that are affordable. And yet the government doesn't, they're bringing him in, but they're not listening. What do you think?
Yeah, you've hit on what is a very serious issue. So part of what contributed to the prices escalating the way they did was that you had too many hands in the pie, right? And so you had development charges that were going up on a regular basis 10 times inflation, right? I mean, it was just, municipalities saw new construction real estate as a cash cow. And so they got so disproportionate to reality. And while the market was, frothy, that's great. They were able to do a lot. But at this stage, it becomes an impediment to actually building. So, development charges, HST, and I'm very grateful that they've now come up with a program that is rebating the HST on new construction, because that will help us get rid of current inventory. The program may not necessarily help us to start construction on new projects, but it will help us sell off the current inventory, which, across the board, there still is quite a bit of inventory on near completed condominiums or completed condominiums. So absolutely, the government's share of the pie got disproportionate to what was possible. And so you want to have affordability, then everyone has to participate in that.
Agreed. That's such a great way of putting it. And I've said this, I have my own political views. It's regardless. I've said it a million times. Like, there's not a single level of government that can come back and tell you they can build better, faster. None of them. Have you ever seen, I think it was actually Brad Bradford, who's running for mayor now, is like, have you ever seen the public sector do it better than the private sector? Ever. He's like, give me one instance, right?
It's not what they do, right?
It's not what they do.
Let the people who do it, is what they should do.
But don't handcuff them, because, and this is where, just to come full circle in the sense that I think it's very unfair, this, like, the big bad builders, is because they see the big bad builders over here, and then they hear the government going, but we just want to make it affordable for you. And they're like, but the big bad builders. And you're like, but we can't build anything affordable while your government is lying to you. And I don't mean to get political, but
I get what you're saying, because I felt the same frustration where you listen to a press conference about how we need to have more affordable housing, and then they'd go back and vote for an increase in the development charges on the same day. So exactly how does that work?
They're talking out of both sides of their mouth, right? For
sure. So that is an issue. And so, when you're talking about where's the way forward and what are we going to be building? Currently, you're right, there's no one building high-rise condominium. Now, the low-rise market is almost a completely different marketplace. And so the low-rise condo market, townhomes and that type of product is actually selling very well, because we're really in a end-user type of environment today, and that is their ideal product type to buy. So I kind of separate the two. But on the high-rise side, we're faced with a number of issues that, yes, no one's starting construction on any new condominiums. Now, we're converting some high-rise buildings to rental, but that's not the ultimate long-term answer for everything. There is a marketplace for purpose-built rental, and you're seeing projects convert to it, because that is the only way that you're seeing any ability to have a profit. On the condo side, some things have to change in order for it to be profitable again. So you've got a number of factors. You talk about
please tell us.
The government's share of it. even the way condos get financed. Like, so we're in a marketplace that is really absent. Well, there's some investors in the marketplace, but part of what drove the market in the last couple of years of the market is speculators, and we might as well be honest about it. Is they in the last, say, 3 years of the market drove the prices into ridiculous levels, and that I'm very happy that they're not in the market anymore, because they were really distorting the marketplace, because they weren't treating it as real estate. They were almost treating it as a commodities futures trading deal, where they didn't treat it as, I'm going to buy this and have it as an investment. They weren't investors. Their plan was purely to buy and flip. And they didn't actually have a plan on what they were going to do if they couldn't flip. And that's created a lot of the issue. And, on the developer side, we could have done a better job of trying to keep that speculator out of that marketplace, right? So, it's interesting. From the 1990s, one of the things that we learned as developers is not to want to sell multiple units to one buyer in a building, because
interesting.
Because if that one buyer bought a lot of units in defaults, the numbers are really high. But I think a lot of us didn't consider is that they would get around that by signing up with 15 different developers all over the city, and you don't know that your risk is high, because they're signed up everywhere and for 10, 15 units, and they have the capability of closing one or two. So
right. Oh, it's a very good point. And there were people who walked into sales centers and were like, I'll take this corner unit, I'll take all of these on this floor. I mean, there really were. I mean, people are blown away by that, but I heard stories that happened. And unfortunately, I think the downfall was that there were the average person. And listen, I feel sick about it at times, in the sense that, like, I have young first-time buyers who got into the condo market. We had our federal government saying, don't worry, go spend, go buy. The interest rates are going to be low for a long time. And it wasn't greed. It was just like, we're listening to our federal government to tell us what to do. And now I look, and some of them are like, they're underwater. They cannot sell. It will be years. Now, having said that, I would love your perspective on what you think we're going to see once we get through this inventory, because even right now, I have to tell you, I have clients who are looking for that quintessential first time, but can afford to buy a good, and again, sorry, but like a resaleable good unit. So over 800 square feet, with parking, in a good building, with like decent maintenance fees. There aren't a lot of them. So I see the opportunity where these kids will, on the other side of this, when again, just like a stock market goes up and down, right? The condo market will have a rebound, and it will, that there will be nothing to buy, and that they will see a time when their condos are worth more than they are now.
Well, we're going to hit that stage probably by 2028. I mean, in terms of
completion, folks.
it's in terms of completions, we still have over 20,000 completions anticipated this year, but it drops down to about 12 next year.
20,000 doors?
Yes, this year. It drops down about 12,000 next year, and in 2028 it drops down below around 5,000 or so. So that is nowhere near enough completed new construction condominiums to satisfy the marketplace. So you're going to reach a stage where there's going to be a shortage, and a shortage of choices, because you're not going to have the same options. Now, what that, we talked at the beginning a little bit about just what does a new condominium look like in 2028 or 2029, and I think it'll be different, and I'm not going to say I know exactly where it's going to go, but you mentioned one thing in there was maintenance fees, right? So maintenance fees are becoming a very significant concern for people. So part of it is, where does buyers' expectations or desire of what their condo looks like go to? So one of the things that happened over the last 20, you think about condominiums that started when I first got into the industry in the 80s. The amenities in a building, you had a party room, you really didn't have much in terms of amenities. today, everyone, not everyone, but most people come in, they want to live in a building that's like has 5-star hotel amenities, but they don't want to have high maintenance fees, right? The problem with that, of course, is something that's obvious. Who's going to pay for it? The only people paying for it is the people who live there. So if you want to live in a 5-star hotel, you're going to have a cost associated with it. So I think some of what you're going to see in the future is people reevaluating what's important to them in a condominium. Like, I think there's a marketplace in the future for a condominium with much more pared down amenities, where sure, you have a party room, and some of the types of amenities are not very expensive to maintain, but a lot of these condos, you have these a fitness facility that has a full-time person working in there. Those are all costs that have to be absorbed. Now, if you're
concierge, pools are a fortune.
Pools, and I always say pools after 10 years always leak. It doesn't matter. You're going to have millions of dollars in repairs eventually if you have a pool in your condo.
Yeah.
But my point is I'm not saying where I think it should go, but I think that what you'll see is people starting to evaluate what matters to them. What are the amenities that matter to them? Why are they buying in this particular condominium? If it's the suite they really like, if it's the geographic location, it's the amenities around them in the community. These are all, I think, will override wanting to have these incredible amenities within a building. It may or may not, and there'll always be, I think, a niche market for really higher end amenity spaces. And I don't think it's going to be quite as across the board as it is, because today, whether you're talking about an entry level or whether you're talking about the highest of pricing on a condominium, the expectation on the amenities is almost exactly the same. And I think that's one of the areas that needs to change when it comes to affordability. Size is another factor that I think you've talked about size, and I think it will get a little bit larger because more of the marketplace will be driven by just end users and investors. It won't be a speculative buy, so people will be a little more interested in livable space, right, and how they can use it. The speculator who was never planning on actually keeping it didn't care what it was, right? So you really have to design and put more effort into that. Again, there'll be limitations on size that will just be based on just what your end price of that suite will be. I think you've got to be able to keep, when you're talking about building a building with 300 suites in it, you've got to be able to keep it within an affordable range. So you're not gonna ever go to an era like it was in the 80s where it was, the average condo was over 1,000 square feet. I don't think you're going to see that.
No, and I wasn't going there. I think that they and this is not a Daniels build. These are other companies that built and are not as reputable. But I've seen my share, and I called them the bowling alley suites, or the hallway kitchens, or again, you touched on it. It's the livable space that's so important, because I've seen a 700 square foot condo look smaller than a 600 one, just because everything was in the hallway or it was cut up or whatever it was. And so, I gravitate to sending my clients to these older buildings. They're not old, but that were built years ago, because you got square units, because you still have that ability to have livable space. But what we're missing, and you touched on it with the maintenance fees, is, and I think it's true, it's such an interest, I'll be very interested to see if that is what happens. Affordability is driving our issue overall, whether it's young families and homes or condos, it doesn't matter. So finding that building that has, I say it's like a scale, right? So you've got, you're looking at a condo resale around $1,000 a square foot, and you'd say healthy, right? And then healthy is about $1 maintenance fees per square foot. Now your maintenance fees start going up, the scale dips. The scale, it's less than $1, the scale skips, right? This middle, it's missing. So finding that building that's built a little while ago, that's got a good layout, that's still got $1, $1.10, $1.20 even. But where it comes from is not having a pool. Concierges are expensive, but a lot of people do like them. I feel like that's almost like a basic.
I think that will stay.
I think that'll be state two. I think like with the world we live in, how busy people are, Amazon deliveries, all that stuff, you want to be able to have that. But I think that is where you'll still have those people who are like, you know what, I want to live at the Ritz residence because I want all of the things that go along with that. That's a different market. But even my downsizers who want, they're like, why am I paying an all-inclusive maintenance fee when I'm going to travel half the year?
Yeah, yeah. So I don't think that middle is actually hasn't been built for a while, and I think that's where the market. My opinion is that's where the marketplace is going to go to.
Please call Mitch. We need more.
There are things, other things like we talked about, where government share of the pie has to come down. You know, some of the costs still are out of line, and even how condos get financed, where you have to sell 60 to 70% of it before you can start construction. It becomes a bit of a challenge for the end user who, if you take a 30-story building that's going to take over 4 years to build, that's a long time if you're an end user to plan ahead. So there's a lot of this that's, you know, we're still going to work through over the next couple of years in the industry. But I do think as we come out of this and we start being on the upside of the marketplace, finding that middle, that where it's affordable, it's the quality is there, and the functionality is there, is where it's going to be at.
I agree. And I still believe, like, and again, I have clients and I talk to them on a regular basis. Like, I believe that the ones that got into COVID, that bought downtown, that bought a 1-bedroom, 1-bathroom, they're going to come back because we still on paper have a housing crisis. Like, we still have a housing issue. There's still not enough housing. It's just that no one's doing anything right now, because there's so much uncertainty and there's no one's building anything. So everyone thinks, oh my God, why would I even never buy a condo? Look at crash. Like, there's so much of it, but it's all going to correct itself. Just like, I mean, you've seen more than I have, but it'll come back. And I'm so interested to see what, you know, leaders in the market like Daniels does. And I really appreciate your perspective. I loved it. I love that, I'm a little excited that I was on the same page as someone as knowledgeable as you. Kind of makes my day. And I would love to invite you back and talk more about the HST. We didn't even get into that. I'd love to. I was at the same event and I heard Great Golf speak, and they were just kind of like, builders don't even know what to do with it. They don't know how it's going to work. It kind of worked. It didn't work.
I know we don't have a lot of time, but we actually jumped on it very quickly.
Oh, good.
And we had a very strong April in selling down inventory units
amazing.
with the HST. And yes, what they said about it is true. It hasn't passed legislation. So we are cautious in the sense that we are saying to buyers that, you know, that you will apply for the HST rebate, and you know, they qualify as long as they bought after April 1st. So in the future, once it actually becomes legislation and there's some actual detail to it, we may be able to right up front deduct it from the purchase price, but we can't right now because it's not there. But the buyer is going to get advantage. This is very real. The buyer will be able to get advantage of getting 13% back after closing by applying for the rebate. So that's a significant amount of money.
Significant amount of money.
A $600,000 or $700,000 price condo, you're getting a lot of money back. So it did make a difference for us. I know a lot of the developers kind of stayed on the sidelines because they weren't sure how to treat it. But we saw, like in April, we made 40 sales of inventory suites, which is a really strong number. It's more than double what we would have done otherwise.
And sorry, just to ask you, were these completed suites that you just hadn't sold yet?
That's right.
Yeah.
Completed suites.
I have to say, that was what I heard, was that people went after the stuff. Instead of going to resale, they went to those because of the rebates. But again, like I heard it was like there was a kind of like a shot out in April and then it's kind of fizzled out. But I'd love to stay in touch and hear how it goes. And once it is passed, I'm sure it will be gangbusters.
Yeah, the only downside of the program is that it has a fixed end date, right? So it ends approximately a year from now, and so that's why I don't think it's going to help new
Long
build.
term, no.
Because you can't make plans around something that's going to end in another 10 months, right? But it will, like as far as existing inventory, if you're a buyer who's been looking at resale and now you can go to brand new condominium and actually get it for slightly less than the resale because of the HST rebate, makes a lot of sense.
Oh, I totally agree. And I actually think, listen, I cause space bait. The government gave the builders help, and you guys needed it to get rid of it after all that had happened. And so it's doing its job. But is it solving the issue long term? Absolutely not. It's trying to just help let everybody get through the inventory for sure.
It's helping us sell inventory. It's helping people who really are in a position where they're ready to buy and want to buy. It's helping them get into the marketplace at an affordable price. So yes, it's helping buyers, it's helping the developer, but
It's helping buyers too.
but
Yes, absolutely.
it's not the long-term answer. Well, it is the long-term answer if you just take HST right off of new construction, or you have it at a much lower level. I mean, there's a different ways to look at this, but the bottom line is everyone involved has to collaborate together in order to make this work for the future. And it can't just, the developers can't, there's nothing left to reduce on our end in order to make it work. So the government has to be part of it.
I always said, I'm like, you could pull the trigger tomorrow on the land transfer tax if you really wanted to help buyers. You know what I mean? Like, there's lots of levers. The government just has to get really serious about actually doing something. But maybe the HST is, the first step. But thank you so much. First of all, tell Mitch that if you speak to him, tell him I really enjoyed listening to him last night and meeting him. And I'd love to have you back on. That was a great conversation. Thank you.
I would enjoy that. It was very nice to be on with you.
Thank you. Yeah.